Welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Monday, the 6th of January. Markets are still playing out this reaction to the killing of the Iranian General Soleimani, which has created a significant move into safe haven assets. You look at this gold price, which continues to push strongly higher, 1.6% higher today, $25. 1576, that is a considerable, more than 6-year high. 1557 was that September high, but that burst through that this morning, gapped through it in fact, didn't even pay any attention to that level of resistance today, just went straight through it. And you can see that the selling pressure is accelerating really through equities, equity markets in Europe under pressure. You've got the S&P 500 futures 0.8% lower after a 0.7% fall on Friday. Safe havens, interestingly, with regards to yields, they actually a little bit higher today, but then 10 years just fallen back again. So not a decisive move into treasuries. But certainly we've still got that playing out through the yen strengthening still. But generally speaking, the dollar's been under a little bit of pressure, and that's perhaps a little bit of a surprise given the fact that it has played out at a bit of a safe haven, certainly on Friday. And we're seeing a little bit of bounce back on euro and sterling today. Commodity currencies are the ones that are not really reacting too much yet to this rebound, probably because of the, well, it would be because of the safe haven bias that we are still seeing playing out. But yeah, generally speaking, we are seeing significant moves through markets still playing out. The oil price, again, pulling out on WTI to multi-month highs as the reaction continues on oil. Now, we've had the data points today. We've got the service sector PMIs for Europe. Eurozone data, better than expected on the final reading of services PMI for the Eurozone, and also that helped to improve the composite PMI to 50.9. So just a slight improvement in that Eurozone data. Run rate of growth around about 0.1% for Q4 then. But that certainly will help to stabilise the euro a bit. Even sterling being helped by UK services manufacturing PMI up to 50.0. Now that's bang on the mean line between contraction and expansion. And that helped to drag the composite PMI back to 49.3. So certainly just a marginal benefit through, and we're seeing that coming out actually with sterling rebounding a little bit around about, if I can get my data points back up, sterling around about sort of 20 pips higher after that data point. So that certainly is helping sterling today. And the US data is tomorrow, actually, so we need to just bear that in mind. So you're going to get the US ISM non-manufacturing PMI tomorrow. But generally speaking, still some significant moves we are seeing playing out in the early days of this year. Now, my chart today is Aussie dollar. Now, what we've seen in the Australian dollar was a correction, but that correction back to a key confluence level of this breakout support at 69.30. But look at that uptrend as well in the past 5-6 weeks. Uptrend coming in bang on that 69.30 as well level. That level being tested twice on Friday. Bounced into the close off that level, and again it's bounced off that level this morning. So that is a support clearly that is being looked at. 69.30. Now, what we've got at the moment is these momentum indicators, which have certainly notably turned down. You can not deny that, the fact that the RSI pulled back under 70, that's a profit-taking trigger. And you've got the stochastics pulling back. Now, likely to be moving below the 80 mark. Actually is below 80 mark, sorry, on those stochastics. So that's a near-term negative signal, but it is all playing out within a positive medium-term configuration. RSI still above 45.50. MACD lines just sort of essentially just unwinding and from a positive and bullish position. But also the stochastics still above that level. So how those momentum indicators now respond with the momentum of the of the selling pressure back towards 69.30, something that we need to account for. How the bulls respond to that move is going to be key in the coming days, and sort of is effectively now a crossroads, you could argue, with the market around this level. A clear closing break below 69.30 is obviously negative, and I think below 69.10 effectively would be a breakdown, because you've also got this 21-day moving average, this green line, which supported the market through December, and is again an underlying basis of support there. So a move below that would again, I think, be a corrective move, and you can see the market then retreating further, maybe back towards that 68 figure area. But for now, that 69.30 level of support is holding, interestingly enough. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.